If you invested $5,000 on Nvidia stocks 3 years ago, that money would have been worth around $20,000 today. And so, in case you don't know, your money sitting in a savings account, in most cases, loses value every single year. Inflation is eating it faster than you can imagine. Let me give you a simple example. Imagine you had $100 sitting in your savings account 2 years ago. Today, that same $100 is still $100, right? But here is the real question. Can that same $100 still buy the same things it used to buy 2 years ago? Most likely no, because over time, your money loses value due to inflation. So in reality, that $100 might now have the buying power of maybe $80. And if that money was sitting in a typical bank account in Nigeria, after charges and fees, it could even be less. So I thought, instead of leaving anyone behind in this community, let me break everything down in the simplest way possible. In this video, I would explain what investing really means and the different types like stocks, bonds, ETFs, S&P 500, real estate, and even the difference between buying physical gold and investing in gold. I am breaking it all down today, so you want to stick with me to the end. Now, after my last video on investing, I noticed a lot of people want to invest, but they don't even understand the basics. Some of you even shared in the comment section that you are complete beginners. So whether you're a complete beginner or you already have some knowledge, I want you to watch this video to the end because it will give you some solid foundation to start your investments. Now, before we go further, let me quickly say this. I'll be using both Naira and dollar in this video for illustration. So whether you're in Nigeria or outside Nigeria, you can follow along easily. I've been investing in stocks and shares for over 10 years now. And the first time I ever invested my money in this way was back in 2016, and it was in the S&P 500. At the time, I didn't fully understand everything, but I took that step, and I can tell you this, the return was good. But more importantly, that experience taught me how money really works, and that's exactly what I'm going to break down for you today in the simplest way possible. I still invest in stocks today and I own shares in different companies. But personally at this stage, I prefer investing directly into companies rather than through ETFs. And I will also explain why as we go further in this video. So what exactly is investing? But before we get into that, let me quickly ask you for a favor. Please, if you're watching this video and you're not yet subscribed, kindly do so now, please. It really helps this channel to grow and we're able to reach more people. And also on my part, I'm able to produce better videos. So thank you so much for doing that. Now let's get back. Now, here's the simplest way I can explain this. Investing is putting your money into something with the expectation that it will grow over time. That's it. So instead of just saving your money, you're making your money work for you even while you sleep. You can invest in business, you can invest in land, you can invest in stocks. The goal is simple. Put your money in something and let it grow more money for you. Think of it this way. Imagine your money is a seed. Savings is like putting that seed in a jar and letting it sit on a shelf. It's definitely safe, nothing bad would happen to it, but it does not grow and will not grow. Investing is like planting that seed on the ground. I mean, there are some risks, maybe rain might not fall or insects might attack it, but if the conditions are all right, that same seed has the potential to become a tree, and that tree produces fruit year after year. And this is the difference between savings and investments. Now let me show you all the different ways you can invest your money. And so the number one way you can invest your money is through stocks and shares. And let us even start from here because this is the one most people have heard of. And so what is stock? Stock simply means you're buying a small part of the company. Let me give you a practical example. Just like Dangote refinery stock we previously talked about on this channel. And if you haven't watched that video, I'm going to link it in the description. Go and watch it so you can follow this discussion. Just like Dangote refinery stocks we talked about, when it is listed on a Nigerian stock exchange, if you go and buy shares of Dangote, it means you own a tiny fraction of the refinery. And so when Dangote refinery makes profit, you get a portion of that profit, either in the form of dividends or your share value goes up. And so you become a co-owner, just like Dangote himself. So you and Dangote co-own his refinery. Only that your portion differs, of course, and you benefit from the company's growth. So if the company is making profit and growing, you too, you're making profit and you're growing. Now, just so you know, for some people who are confused, you're hearing shares, you're hearing stocks. Shares and stocks are basically the same thing. If someone said they bought shares in a company or they bought stocks in a company, they are basically talking about the same thing. Think about it this way. If you have like a big cake you want to share with others, that big cake is the stock. And your portion, your little portion that will be cut out for you, that's your share. When they talk about stock, they're talking about shares, it's all the same thing. Don't get confused, okay? So let's move on. The second way you can invest your money is through bonds. What then is bonds? A bond is basically a loan, and you are the one giving the loan. Here is how it works. If a government or a company needs money, maybe the Nigerian or the UK, US, Australian government want to build a road or they want to manage the currency, they'll come to the public and say, lend us money. And in return, we are going to give you back that money in 2 years, 5 years, or 10 years with interest on it. And so when you lend them this money, they will in turn give you a bond certificate. And at the end of the agreed period, you get your money back plus the interest. Sometimes they even pay the interest upfront. It is definitely safer than stores because the returns are predictable. I mean, the government will not run away with your money. But the disadvantage is it doesn't grow as fast as. So think of it this way. Stocks are higher risk, higher reward, whereas bonds are lower risk, lower reward. Both of them have a place in a smart investment plan. The number 3 investment type on my list is mutual fund. Now, this one is very important for beginners because it solves a problem a lot of people have. Now, what is the problem? Most people don't have the time or the knowledge to research individual companies and pick what stock to buy. And so this is where mutual fund comes in. A mutual fund is only a group of persons who are interested in investing, pull their money together and hand it over to a professional fund manager. And that fund manager in turn invest it on their behalf. So instead of picking stocks yourself, you give your money to a fund manager. That same manager uses the money to buy a mixture of different investments, stocks, bonds, and other assets, and you get a share of the returns. In Nigeria, for example, companies like Stanbic IBTC and FBN Quest all offer mutual funds, and you can start with as little as 5,000 naira in some of them. And so it is one of the easiest way for a beginner to start investing without needing to know anything. At number 4 is ETFs and the S&P 500. Now, this is where it gets very interesting, and this is the one I used to start my own investment journey. ETF stands for Exchange Traded Fund. Think of it as a basket that holds many different stocks inside of it. There are different kinds of ETFs. Some ETFs are specifically for the oil companies, which means they track the best performing oil companies in a particular jurisdiction, let's say in Nigeria or in US or all over the world globally. There are ETFs that track banking. Let's say, oh, this ETF is for the banking sector in Nigeria or globally. There are ETFs that track tech companies. So instead of buying one company's stocks, you're buying a slice of many companies at once. And the most famous ETF in the world is the S&P 500. Now, what is S&P 500? It is a list of the 500 biggest companies in America. Apple, Microsoft, Amazon, Google, Tesla, all of them in one basket. When you buy an S&P 500 ETF, you're not just betting on one company, you're betting on all the entire American economy. And historically, the S&P 500 has averaged about a 10% return on investment for a very long term. This was exactly what I did when I bought my first S&P 500 position back in 2016. And when I sold, it gave me a very good return. Can I ask you something? Before today, did you know that an ordinary person in Lagos, Accra, Nairobi can buy into companies like Apple and Google? Because you can, and that is the power of ETFs. So we'll move on. We've spoken so much about ETFs and S&P 500. At this point, if anything is confusing or you're not clear, please ask me the question in the comments. And if you have something you want to share or add to this conversation, please use the comment section. Do so. I would love this community to be as engaging as ever. Let me ask something about the S&P 500. So in the S&P 500, there's 500 top companies in the US. 1 or 2, 3 companies, 100 companies might be doing well, and some might not be doing well. And so guess what? It is definitely going to affect your position and your portfolio. So if one company is doing well, the other one is not doing well, depending on the percentage of not doing well. So it's definitely going to drag this thing somehow. So if you want to invest in the S&P 500, you want to put this into consideration, like all these other companies, are they still performing well? Are they, These are all the things you need to think about and consider. So let's move on to the number 5. Number 5 is real estate. This is basically investing in lands and properties. And right now, I don't want to be biased, but this is one of my favorites. So how it works is your money appreciates either by you earning rent or the value of the property increases. Personally, this is my surest bet because I grew up in this kind of setting. I grew up in a family that invested so much in land. And sincerely, in my how many years on earth, I have never seen one land depreciate or lose its value. Personally, I have never also seen anybody lose money because they invested in land. Most of the lands that people bought like back 10, 20 years ago, when I was growing up, most of those lands, they bought it for very, very chicken change. Today, they are worth millions of naira. In short, those areas today you can't even buy, you can't step in, They've over time appreciated so much in value. Like I told you, if you watch the previous video on Dangote investment, I shared a story about my aunt who used to invest in stocks, and now she's now taking all of those money and investing back in real estate. So that's one of those cases. At the end of the day, we'll still fall back to the land because land is just God's legacy for our prosperity. I've known lands to appreciate in value, and so this is why a few persons and I have decided to pull our money together to invest in more lands in one of the fastest growing cities in Nigeria. Initially, there were just 4 of us, but right now we are about 11 in number. And we are even considering making it open for others to join us. And so if this is something you're interested in, do let me know in the comment section, and we'll indeed make it open for others to join us. And of course, we'll give you all the details required, the city, the place, the price, everything you need to know. And so if you haven't noticed, this channel is all about building wealth and multiplying our money. We're not joking here. In this place, no more poverty. You decide your future. The next form of real estate is what we call REITs. And REIT stands for Real Estate Investment Trust. REIT. This is when a company owns and manages real estate properties, shopping malls, office buildings, apartment blocks, and they allow ordinary people to invest in them by buying shares just like stock. With this, you can invest in real estate even if you cannot afford to buy land. When you buy shares in a REIT, you benefit from the rental income and the property value growth that the company earns. At number 6 investment type anybody can make is investment in gold, silver, and commodities. Now, this is where I want to spend a little extra time because there's a very common confusion here that I want to clear up. There are 2 ways to invest in gold, and they are very different. The first way is buying physical gold, raw gold, gold jewelries, or gold bars. So this is how it works. You go to the dealer, you buy the gold, and you take it home or you put it in a vault. You own the actual metal, like you can feel and touch your gold. The second way is investing in gold through the stock market by buying shares in gold mining companies or buying a gold ETF that tracks the price of gold without you ever holding the physical metal. So what's the difference and which is better? Of course, physical gold has real tangible value. You can hold it, and it has been a way to store wealth for thousands of years across Africa and the world. But there are challenges to this, some of which are storage, security, and the risk of being scammed by fake gold dealers. Talking about security, I will not forget my experience ever in this life. So when I was in school, I used to invest a lot in gold. I used to buy gold a lot because then I used to get like pocket money, and when I save, I used to buy gold. So one day I won my gold and I went to the cinema to watch a movie. When I finished, I boarded a taxi and I was coming back. And if you know Port Harcourt in Nigeria, the craziest street or the craziest road ever. I was just passing by it and I was standing in front, and the window by my side was half wind, and we're just moving in slow motion. Like there was a bit of traffic and the car was moving in slow motion. And the next thing I just heard was one of these hoodlums from the window had put his hand. I didn't even know. He was so fast and he just dragged the thing out of my neck. And when I came out that day, I was pained, but most importantly, I was happy that nothing happened to me. I was not injured. That was just, but I was really pained that I lost my gold. These are all disadvantages of physical gold. The possibility of losing it after spending such an amount of money, it can be so discouraging and heartbreaking. So you want to think about it before you invest in your physical gold. The one thing people worry about the most when they go to buy physical gold is this really gold? And so if you would like me to teach you how you identify real gold, just let me know in the comment section and I will share it as a post in the community section. Make sure you're checking the community tab regularly so you don't miss updates like that, because I'll be sharing more helpful tips there as well. So So the second one is investment in gold through the stock market. This one is more liquid, meaning you can buy and sell quickly. It tracks the global price of gold, and you do not even need to worry about where to keep it or whether it is genuine or not, because it is not the physical gold, of course. My honest take is that both are great. None is actually better than the other in this case. And the same logic applies to silver. Same two options, physical silver or silver through the markets. But before we end this video, let's revisit bonds once again. Remember I told you about government and corporate bond, and I focused more on the government bond. Let's talk a bit about corporate bond. So for government bonds, also called treasury bills or FGM bonds in Nigeria, they are loans you give to Nigerian government. They are considered the safest investment because the government is very unlikely to default on naira denominated debts. While for corporate bonds, on the other hand, they are loans you give to private companies. They usually pay more interest than the government bonds, but there is more risk because companies can go bankrupt. One thing you must keep in mind when investing is that the higher the promised return, the higher the risk, and this includes bonds. So you always want to ask yourself, why is the company offering 20% when the government bonds are only giving 12%? Now, here's what I want you to take away from this video. Investing is not for the rich alone. Investing is how you become financially stable. The rich people you see around you today, most of them did not start out rich. They started by understanding these exact concepts by making their first small investments and then building up from there. So you can start up today with whatever you have, even with 5,000 naira or $10. The most important thing is that you start and that you understand exactly what you're doing before you put your money anywhere. And so if you learned anything from this video today, kindly like right away, subscribe and share this video with your family and friends. You might be helping a friend become financially stable. Also, if you want to lend your voice to this discussion, or you want to add something, or there's even something you did not quite understand, let me know in the comment section and I'll be more than happy to respond. Let's make this place a community where information like this flow freely. See you on my next one.